Hello everyone, this is Teddy Kekstead, and we are here on January 21st with a Forex market and trading signal analysis for January 21st through the 22nd to wrap up this week and see what's going on. Before we get into this webinar, I just want to remind you about our disclaimer here to remind you that this is for illustrative and educational purposes only. And before we get to the analysis, we just want to remind you to subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle version. All right, we have the Forex-Trading-Unlocked.com website pulled up already. We're going to skip past the economic calendar. The dollar index yesterday was held its ground, and today it's now back under pressure. We did have a buy signal back on the 7th of January, and we are targeting this 91.73 to 92.36 band. Right now, today, the dollar is under pressure, and we're going to take a look at it. The Euro US dollar, which is the biggest weight, is up today. So is the pound, and another one. Everyone is pretty much hitting the dollar. So, but remember that overall, all these markets have been making lower move lows and lower move highs. So, you have to view this as a short-term correction on the intraday. There are some reasons to kind of maybe believe that we're running out of gas. So, but we do have a sell signal that was triggered here on the 7th of January. That was when the dollar index bottomed. So we have $1.1975 down to $1.1889 as our price targets for the Euro US dollar right now. Our risk level right now is $1.2053 at this high. Any trading above there definitely has us back on the long-term bullish campaign, which we are overall bullish all these markets against the dollar, but right now we are in a short-term correction. The dollar has been getting beaten up for months. We now have passed the inauguration date in the U.S., so now we'll see what kind of things happen with the markets. We're heading into the weekend. We'll see what things happen over the next few days just as we get things rolling. I don't expect to have any major news because we're rejoining all these accords, so now they're going to set meetings, and those have to be made up for the future, which probably won't be happening until the next month or two. And then it also has to depend on the coronavirus, how they're going to handle all this. So we'll see how this goes. But the Euro US dollar is in a bullish mode on the intraday level. It is pushing resistance, but as you can see, it's coming off the highs from today. Now let's take a look at the British pound, US dollar. Now the pound, unlike the euro, has had little corrective breaks, but it has been in a higher move high, higher move low situation for a while. It keeps pressing on to new highs like it did yesterday and now today, following through. This, I think, is where you're getting your biggest drawback on the dollar index as far as an indicator, is because the pound is one of the biggest weights, second biggest weight next to the euro. So the fact that it's nailing new highs is really putting a little bit of a crimp on the dollar bulls, if you will. So I wouldn't try and fight this one. We now have divergence in currencies. Europe is all excited about working with Biden, so we'll see how things go. But the UK lockdowns and everything else is also weighing on their economy, and it's not doing the best of help for them. So we'll see how this works out. Right now, the trend is your friend. If you're long, stay long and keep working your risk. I would say that this last swing move low here, this would be the area to stay long against. Anything above here stays bullish. Anything below here would be bearish, at least in the short run, for a corrective move. So that would be your key pivot right here around $1.3524. Interestingly enough, and this is something you need to watch, the Swiss came butting off a key resistance here, and we had a buy signal back on. This was on the 7th also, when all the currencies turned pretty much. So we're looking for this to bounce back and challenge this key pivot level. If it gets above here, that would be a very good indication that dollar strength is coming into play to push a correction. Now, I'm not bullish the dollar overall for a very long time, but it's very likely to see a extended correction yet, at least for probably the next month or so, especially because if you watch interest rates, which you should, if you're a currency trader. The 30-year Treasury bond keeps on bashing support and pushing weekly lows. So I think, while the short terms are hitting, scratching the ceiling on highs that they can't penetrate anymore because they've hit the top of the curve. So that is a big deal for currency pricing, and there's no way that that's not going to cause some sort of an impact with the dollar, and that's probably why you're seeing this bounce in the dollar now in the later part of the day. Remember, Europe is closed now. Asia markets have been closed for a while, so it's just a U.S. trade. And I think now the dollar bulls are starting to take a little profit. And I think the bears, your weak shorts, are going to start to get really swallowed up. So be very cautious with this. We still are in a buy mode. It's been making higher move highs and higher move lows. So right now there's no reason to think that, and with that being said, that the U.S. dollar still has a chance to be a bull. Now we have divergence in currencies. So start to look at the trading zones on their own merit, meaning that you have the euro, the pound, and the Swiss as your euro zone. Now we're going to look at the Japanese yen, the Australian dollar, and the New Zealand dollar. These will be your Asiatic trade zones. Now, if the dollar is a bull versus most currencies, now it's been kind of where a lot of the currencies have been trending together against or with the dollar. However, the yen has been on its own for the most part, and it usually goes the other way when most currencies are going up. And this is why I think you need to think about why you might see a correction, or not a correction, but a bounce back in dollar buying against these other currencies. Look at the US dollar yen. It had a buy signal back around the same time as these other currencies did. Now the interesting thing is that the longer term picture with this one is it's still making lower move lows and lower move highs. So unless it gets above that 104.41 area here by this arrow, there's no reason to think that this is going to be even coming near this upside target zone. However, should this dollar correction be something that can manifest itself truly for the next month or so, then we may be bottoming now and getting ready to challenge this 104 area and then come back up towards this 105.36 area. Am I overall a bull with the dollar versus the Japanese yen? No, not at all. But I think in the short run, there is a good chance that we could push a corrective move up into those levels. Another reason it supports this is the Australian dollar, US dollar, which is now rallying once again over the past couple sessions. It's been making lower move lows and lower move highs unless this Australian dollar takes out this last swing high over here around 78.05. I don't see much strength coming into this currency. I see it coming back to test support and settle down more in towards the 76.41 area. Now, the one thing that Australian dollar and New Zealand dollar have going for them, and especially the Australian dollar, is they're commodity-rich countries. That's one of their major exports, and especially for Australia with China. If there's a resurgence of buying in the economy and China gets their engine going again, then that's good for Australia. And also with the fact that there's a inflation going on in the commodity markets. So that will probably give credence to have a stronger Australian dollar regardless of what's going on with the dollar versus other countries and stuff like that. So we have a true, we're going back to our trade zone plays now, which we haven't had in a while. Brexit's over, US elections are stable, are done now. Now we can get back to different areas of the world, what's going on. We're trying to get everything out of coronavirus or whatever it is, new world, whatever it's going to be. But you're going to have to go back to trade zone methodologies and outlooks when it comes to the currencies now. So since these are making lower move lows and lower move highs, that's indicative of what? A bearish trend. So right now, unless we pierce this 78.05 to make a higher move high, we are definitely looking at this as a corrective move, looking for it to fall back apart. So New Zealand dollar, US dollar, we had a sell signal. Now this one's much more extreme, and that's why I said, like, for instance, Australia, because of their commodity driven economy, they may not fall so much against the dollar if, say, like New Zealand dollar does and the Japanese yen does, as far as a trade zone is concerned. So in this one here has been making lower move lows and lower move highs. As you can see, it did not make a higher move high yet. If it takes out this 72.45, then I would say that it's looking to continue this bull trend. Remember, this has been a very steep trend here, so I would say if we move this, now let's create another one here. If we put another trend line in here, this is a more sustainable trend here. It's not so steep. So for it to continue up in this little corridor, absolutely that's possible, but it's got to breach the 72.45 first. Trading below there has us targeting this downside target area. Now let's look at the US dollar, Mexican peso. Spring break's coming up. I'm sure all the college kids want to know how much it's going to cost to buy the peso. Well, don't try and catch a falling knife, my friends. If this is bottoming, this would be your target zone up as an extreme 20 pesos, 20.79. I don't know if we can get there right now with the way this bear market is going. Lower move lows and lower move highs. You got to breach this high right here above 20.26 pesos to the dollar. And then even there, I think it's going to get really sketchy. If it can sustain a trade in this area, then I see and if there's any real major dollar strength, like for instance, the dollar index starts really screaming and there's a big turnaround in the pound and stuff like that, maybe then you'll see a bounce. But right now it looks like if you're looking to go on spring break, you may be seeing newer move lows before you see higher move highs. So our risk level for any I would say risky longs that want to try and get in, I would say don't be long below this 19.54 level, because anything below here, the peso could be down at 16 pesos to the dollar in a heartbeat. So now let's look at the US dollar Canada, which especially with the pipeline agreement and stuff like that, that doesn't bode well for Canada. Well, Canada's doing well because oil's high right now. And especially with this other stuff going on, it's going to make things a little bit more inflationary over there. So I don't know if we're going to be able to catch a rally. This little area here, these last two highs is our buffer zone and key pivot area the market has to get above just to stay neutral, not even bullish. This market has been in a free fall for a while, and there's no reason to think that this is not going to continue. I mean, the slope of this trend is not severe, so there's no reason to even... I mean, by attrition, we may come out of this downward sloping resistance line, but then that has us in sideways. It doesn't really have us getting bullish. So I would use caution on any type of thought or idea about trying to get long that market. So Euro US dollar, where we started off, as you can see, it's not doing very much. Now let's just look at the hourly real quick, just to give you a little gauge of something here. We have... this daily chart here, we pulled up the Fibonacci levels here. So we have a trade that's been going on since we had this bearish engulfing line where we initially sold $1.2268. We had a stop level that was above here at the high at $1.2349. Now it's been lowered down to $1.22 even. It's very possible that between now and Friday's close tomorrow that we could have a spike and get stopped out on this trade. Ironically, if you take this high here down to this low right here, that would be a 50% retracement, which that right there would be a great selling level. So it's very likely that if we do get another surge tomorrow that we'll get stopped out, and that may stop right around that area and then come back and make new lows. But we don't want to let a winner turn into a loser. So we got a profit on the trade. It's the right way to manage it, especially because we've already hit halfway between where our stop is now and where our downside target level is. So we have two downside targets here, so we'll be getting out of one at $1.1975, and at that point we'll definitely lower the stop to an extreme level for the second trade down to $1.1889. I don't know with the strength if some of these other currencies, especially with the Swiss and the pound, unless they turn around again. If the pound falls off its highs and if the Swiss starts to go back up and start challenging those upper levels like we were looking at earlier, then I find it hard to believe that the euro would be stopped out, and then it would be coming to hit new lows. So we'll be definitely watching this low right here. This will be a key little spot that we need to fall through to confirm weakness and get us back down on the track to get down to this downside target zone. So that's what we're looking at so far for the rest of the week. We don't have any questions in the chat box. So with that, just want to remind you to subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And then you can learn how to trade some of those signals like we were looking at on those charts, like the bearish and bullish engulfing lines and things like that. So with that being said, good luck with all your trading. Make sure you always keep your money management rules in check and have a plan, and we will talk to you soon. And always leave some questions on our chat